Good evening, everyone, and this is the afternoon recap of what we dealt with this afternoon. I'm your host, ZMoose12 or Zach Musso, and today we're going to be running through some indicators, some index review of this week so far, and I have a ton of stock picks to run through. So, without further ado, let's start running with these market indexes and let's check out what's going on with them. All right, the number one index that I've been watching over the past couple of days is the NASDAQ, and rightfully so. This is a 10-day, 15-minute period, and if we look at the other indexes that I look at, the S&P 500, the Dow Jones, the Russell 2K, and the NASDAQ. Those are the four. The other three, I mean, right now we can look at the NASDAQ and see that it's consolidating. We're looking at the double price support at 1984 and 1979. Let's round up. You have two resistances as well that has been consolidating about. And yesterday was the first time that we hit 2014 and we broke out above 2008 on the NASDAQ. And I guess, man, it's been a while since we've seen this number. So this is a big step for the NASDAQ, yes. Today we took a hit and we did pull back. This is a perfect day to dip buy into a couple of tech names. Some of which were the bump and run setups that I normally talk about, others that were just good setups on dip buy days. So today was something that I was watching the NASDAQ for. Why was I only watching the NASDAQ? Let's look at the other market indexes. The S&P, okay, let's just go to a 20-day, 60-minute. The S&P is, this price level is 1,007. The current support, or that's the current resistance that is controlling what the S&P is doing right now. We've had an incline the entire way through. It's been an ascending trend. Of course, we've gone through dips, but look at these pops that we go through. Pop, pop. We consolidate a little bit, another dip. I'd expect a pop soon. I really, really would. We've been consolidating in between 995 and 1007. We hit 1007 today. We did dip in the last 30 to, I guess it was, the last 30 minutes of the market. But again, solid day. We stayed above 1,000 on the S&P. I'm not worried about the S&P. I'm not worried about the Dow. The Dow is doing the same thing. Pop, consolidate. Pop, consolidate. For the past 3 days, since the beginning of this week, we've been, in a tight range of 92.20 and 93.20. There's been a 100-point range. Today, we were close to hitting 93.20 resistance. We didn't get there. Last 30 minutes, we pulled back. This is something that I absolutely love to see. The Russell finally turned around. I was watching this one for a while. It was consolidating, but again, pop. It's more round because we're dealing with smaller type companies, and we're looking at companies that are more volatile. But this is another good index to track. And with the resistance here is somewhere around 572 to 570, and we took another dip today. But again, we recovered. And we actually were positive in the last 15 minutes of the market. We did all right. So why I'm watching the NASDAQ is because it's the next thing to break out. We haven't seen a breakout lately in this. Pop, of course, pop. But we've been consolidating longer on the tech sector than in all the other tech sectors, or than in all the other sectors of the market. Now, yesterday we had that huge China pop, okay? CAEI continued its run today, but again, you're seeing lower volume accumulation. So the China pop was yesterday. I was expecting the tech pop to be today. We got slowed down a little bit by some econ data. I expect the NASDAQ to be above that 2008 to 2014 range by Friday. I'm expecting a pop in the NASDAQ. I'm going to repeat it again. Sell into strength. You can't lose if you sell into strength, especially if you bought on these dips. These kind of dips are perfect setups when they get held on these supports. 1984 held, 1978 held. It's been holding for what? 5-6 days now. This is something to watch, and tech is the next sector to explode. After that, it's time to take some profits. Video 2, we'll talk about some indicators, and then we'll run through some positions and some charts.